Okay, good afternoon, everyone, and I appreciate you taking the time to attend this call. I'm Sid Rajeev, Head of Research at Fundamental Research, and our guest today is Tucker Barrie, CEO of Noram Ventures. Noram is a Lithium Junior with its flagship asset in Nevada. They're close to several well-known projects, and we believe they are in an area ripe for consolidation. So the agenda today is I'll kick off the call with our thoughts on why investors should look at electric vehicle or EV metals. Tucker will take over from there and introduce us to his company, highlight some key upcoming catalysts and things we can watch out for. For listeners, you can either wait till the end to ask questions, or if you have questions during the presentation, feel free to type them in and we will try to respond to them. We encourage questions to be directed to Noram since we have Tucker on the call today. A recording of this will be uploaded on our website. Here are some key disclaimers. Please take a moment. All right, so let's start with the question, why EV metals? And this chart gives us the answer. Market consensus is that over 50% of all new car sales and 30% of the global fleet will be electric by 2040. That's up from just 5% or under 5% today. The International Energy Agency expects global electric car sales to reach 23 million by 2030. Roskill, another consulting firm, expects 32 million. This is up from 5 million cars in 2018. Pretty much all the major vehicle manufacturers are making and planning significant investments into the sector, as you can see in this chart here. Now, declining battery costs is the #1 reason that's expected to drive sales of EVs. Battery costs are down 85% in the past decade. The cost of battery for an EV, which was 50% of the price of a car, is expected to drop to 25% by 2025. As shown here, prices of EVs are expected to be competitive starting 2024, which is when we believe EV sales will really start to pick up. Now, let's see how we can capitalize on the surge in EV sales. The first step is to understand a battery's composition. In a lithium-ion battery, lithium is used as an electrolyte, graphite as the anode or the negative electrode, and cobalt and nickel are typically used as the cathode or the positive side. Currently, there are 5 main types of lithium-ion batteries. The chart on the top right shows the composition of metals by battery type. Lithium is used in all. The consensus is that NMC batteries, or nickel, manganese, cobalt, will dominate the sector by 2030. And as you can see, this type includes not only lithium, it includes cobalt, nickel, and manganese. Now, these are our estimates of how much of each metal an electric vehicle will require. For example, graphite, about 75 kilograms of graphite is used in a car, approximately 10 kilograms of cobalt, 60 kilograms of lithium carbonate, and about 30 kilograms of nickel. Now, if you apply these numbers to the expected number of car sales in 2030, let's go with the most conservative estimate of 23 million vehicles. You're looking at a significant increase in demand for all the 4 main commodities shown here. As shown in the column on the right, you can see cobalt, lithium carbonate, and graphite. The demand is expected to more than double over the next decade. Now, before I invite Tucker, I just wanted to show you a table with some key lithium juniors. Noram is on the extreme right. What we did here is to look at the enterprise value, or EV, to resource ratio of Noram and others. And we found that Noram was trading at just $5 a ton versus the comparables average of $18 a ton. Note that this is from our last report on Noram last month on July 17th. Since then, Noram's share price is up 33%. With that, I would like to welcome Tucker. Tucker, you will be able to share your screen now. Please go ahead.
Okay, thanks. There's share screen. I'll click on this and share. And let me get this. How is this looking?
Perfect, Tucker. Go ahead.
Okay. If you don't mind, I won't go to full screen. I'll just have the little slides on the side, but I think the point will come across.
That's
Yeah,
fine.
so my name is Tucker Barrie. I'm the president and CEO of Noram Ventures. I've been the president for the last 2 years. I'm more of a technical person. I have a PhD in economic geology. I have a fair bit of engineering experience as well. And the team in Vancouver is strong on marketing and other aspects of the company. So what I'd like to do is present the company, particularly the Zeus lithium property, which is in Nevada. And it's only a 7-minute presentation, so let me move on. Okay. The location of the property is in central Nevada along the western border near California, 225 kilometers from the Tesla Gigafactory near Reno or near Sparks, Nevada. And we're right next door to Albemarle Silver Peak lithium brine producer, which is the only lithium producer in North America currently. And it produces a modest amount of lithium that plugs into the electric vehicle and chemical industry. We've recently drilled the project, and we're going to be drilling again this fall. The last drill program ended in November of 2019, and we came up with 124 million tons of lithium and indicated resources and 77 million ton in inferred resources. In total, this represents 1.18 million tons of lithium carbonate equivalent. And let me just explain that in a little more detail in a moment. To put things in perspective, other lithium claystone deposits like Zeus are found in the western United States and in western Mexico. Here you see a map of the Basin and Range province of the western United States and Mexico with the locations of other lithium claystone deposits. We're right next door to Cypress Development's project. They've produced a pre-feasibility study, which is an excellent benchmark for us in terms of the economic and engineering evaluation. Our deposit is located immediately north of theirs. This is a 900 ppm lithium cutoff marked in red where our deposit is, and it's open, very clearly open and expanding in terms of thickness and in grade to the east and to the south. We know that this will be fertile area. We'll drill this fall, and all the way up through here will be fertile. And we should be able to maybe even perhaps double this resource with just 10 more drill holes. We plan actually 20 drill holes in a 2-stage drill program. Next slide. In comparison to other lithium companies, Sid just mentioned a little bit, including brine plays in South America, the very large companies. But in terms of other claystone deposits, we're most closely like Cypress Development and also like American Lithium, both with deposits in Nevada very close to ours. And here you see the market cap of these companies, their share price, and the amount of lithium carbonate equivalent in measured, indicated, and inferred resources in situ. Right now, Noram should be trading perhaps around 28 cents if our lithium deposit on a lithium tonnage basis were equivalent to Cypress, or it'd be even up to $1.24 per share. Right now, we're only at 20 cents per share. So we have a long ways to go to catch Cypress and American Lithium. Cypress is more advanced in the pre-feasibility study. American Lithium is just like us with just a resource calculation. Here you can see a plot of lithium carbonate equivalent LCE resources in million tons. Noram's down here. We aim to get up to double this, to get up to very close to Cypress by the end of this fall. And then you see American Lithium and these other companies with their deposits comparing LCE versus market cap. This line is a correlation line, and if we're able to follow this trajectory in time over the next 2 to 3 years, we follow for every million tons of lithium carbonate equivalent gained, we should increase 20-fold in terms of our share price. Right now we're trading at about, and our market cap's about $8 million. It's a little higher than this right now. So we should be able to follow this line over the next 12 to 18 months. Let's move on to the next slide. A little bit more on the market. Of course, lithium-ion batteries for vehicles like the Tesla Model S. There's 50 kilograms lithium carbonate equivalent per vehicle used in the battery packs. And this will continue and will continue to rise as the demand for large lithium-ion battery packs dominates the market, particularly in North America. People like large batteries. People like to drive farther and drive 300 miles instead of 250 miles. So these battery packs will only increase in size, and the demand for lithium will increase accordingly. We're just 225 kilometers away from the Tesla Gigafactory. This year, they'll produce 400,000 lithium-ion battery-bearing vehicles total in the Gigafactory and also in their factories in California. If you multiply this by the minimum lithium carbonate per battery, it turns out to be 20,000 tons of lithium carbonate demand just this year. Our mine, if we get to the stage to produce, will produce that amount per year. So we can satisfy, just us, we can satisfy the demand for Tesla right now. I should mention we're not linked to Tesla in any way, but some electric vehicle companies are showing strong interest in these lithium claystone deposits. Another chart that demonstrates this, here's Tesla with their 400,000 lithium-ion batteries per year in 2020. I used this chart 2 years ago, and it's been very accurate. You can see that there's an asymptotic rise in the demand for electric vehicles over the next 10, 20 years. And in 10 years, as Sid mentioned, the demand will be very strong indeed, at least a twofold, probably a 3- or 4-fold increase in the North American market. And Europe is ahead of us, and China is ahead of us in terms of demand for lithium-ion batteries. Just to summarize briefly, I haven't mentioned about processing, incidentally. I'm happy to take questions on processing and how we can extract lithium and produce a marketable product. But just to summarize our financial situation, we just raised $0.27 million. We're using a fair bit of this for marketing right now. We're also having warrants coming in. I mentioned here 1.5 million in warrants are out at 14 cents. We're trading at 19, 20 cents right now. So these warrants are coming in, and it's filling our coffers. We have $400,000 in the bank right now. We'll get more warrants in, and we'll probably have a raise of $1 to $2 million in September this year to cover the costs for this drilling program. We have a strong management team. We have a large resource that's quite valuable, 1.18 million tons lithium carbonate equivalent. And in situ, basically, we're over an $8 billion resource. And we'll be able to define that more clearly with detailed engineering and economic studies in our initial preliminary economic assessment. We hope to finish by the 3rd or 4th quarter of 2021. And Noram has 100% ownership of this property. It's very important we have no royalties, whereas almost all of the other lithium claystone deposits in Nevada and elsewhere have 1, 2, 3, 4% royalties on this. So we're very favorable. We could merge with another company. We've been in discussions, just informal discussions with our neighbor Cyprus. We have a very good working relationship with them. You know, maybe in the end we might share water resources in order to do the processing. But we have not had any formal talks with anyone yet. We still have a long ways to go before we start considering getting involved with a potential merger with another company. And that's all I have for now.
Thank you so much, Tucker. We can now open the call to a Q&A. Listeners, if you have any questions, please feel free to type them in, or you can click on the raise hand option. I can unmute you. I already have a few questions that I've received. But maybe, Tucker, you just mentioned about processing. Maybe why don't we start with that? Do you want to talk a little bit about how your project, the clay deposits, are different from the normal brine and pegmatites you see out there?
Right. So there are 3 types of lithium deposits. There are brines, which are being processed right next door to us on Albemarle's Silver Peak operations, also down in South America in Chile and Argentina. Bolivia has very large brine resources, but they're chemically complex, and they will not move forward, I believe, in the next decade. And so the brines produce favorably. There are several large companies, Albemarle, SQM, Livent, and others, and some Chinese companies. Most of the pegmatite deposits, where they mine spodumene, what they do is they produce a concentrate and they ship it to China. Namaska had a spectacular near failure earlier this year and in the previous years, as they raised over $1 billion and weren't able to get a pegmatite deposit and processing facility both into production at a reasonable cost. And so they're effectively in bankruptcy protection right now. Though pegmatites are difficult unless you just want to ship a concentrate. And the concentrate, a spodumene concentrate, can be viable deposits, but the margins aren't very large. They're not producing the end product. It's Chinese companies that are producing the end product for them. But part of the reason why China's electric vehicle market has taken off, it's based not so much on brine lithium, but on pegmatite lithium, where the concentrates are shipped from Australia. So we have a claystone deposit, and the lithium is exclusively in the clay minerals. There are other minerals in the deposits that are really sand and gravel of quartz and feldspar mostly, that can be separated out. And we feel that it is important to study the separation of 20–30% sand and gravel before processing the lithium-rich clays. Effectively, what that does is it upgrades your deposit before you start processing. The second step that others have pursued and successfully, including Lithium Americas and Ioneer, other neighbors in Nevada, is to use a sulfuric acid digestion for the clays to get the lithium into solution, and then to use a series of chemical precipitating steps and then membrane filtration and ion filtration to get a marketable lithium product, either lithium carbonate or lithium hydroxide. We've done initial tests with our claystones, and we can get 80–85% of the lithium into solution with moderate amounts of sulfuric acid, and also using moderately elevated temperatures. So we have a default that will work. Cyprus has used that to move forward with their with a pre-feasibility study, and their economics are quite favorable, even with lower lithium prices right now. So as a default, we have a deposit that's effectively identical to Cyprus's right next door. It's the same Esmeralda claystone formation, same mineralogy, and so we aim to improve on their economics and their chemical engineering studies as we initiate ours. And I have some ideas. I've been doing some initial testing outside of the company where we may be able to streamline that process, and I can explain more about that as these data come in.
Okay, Tucker, thank you so much. So good question we got is, in their report, FRC feels the region is good for consolidation. What are your thoughts, Tucker? I know you mentioned that already a little bit, but do you want to expand on that?
Yeah, so I've been involved with other projects where there were deposits that were on two sides of a property boundary. And what happened with those projects that a major came in and took out both companies. And so Noram would be very happy to have that situation occur with our Zeus property and the adjacent property that's right now owned by Cyprus Development. I think Cyprus would be quite happy with that as well. We need to be a little farther along in the process we need to demonstrate very clearly we have the chemistry down before a major or even an electric vehicle company would come in. So we have a few, it might be a couple of years down the road for something like that to happen. The other possibility is to merge within Clayton Valley. And so, well, there's a third option as well within Clayton Valley I'll mention. For the claystone deposits, the obvious partner would be Cyprus Development. And as I mentioned, we're cordial with Cyprus. We admire the clever work that they've done with their engineering studies and their transparency. And so, we can share resources, and that we could move in that direction. But we want to drill our deposit completely before we have any detailed talks with Cyprus. And like I said, we haven't had any advanced merger type talks with them. The other option in Clayton Valley is there are brine plays like the Silver Peak operations that pump brine from the subsurface process it, and they're working toward producing a marketable product, a lithium carbonate, lithium hydroxide product. Their brines, after they've taken their lithium out, well, they're just going to pump it back down into the ground. And I've had informal conversations with one of those companies, and they may be very interested in having that brine come over to our property for us to use during our processing. And if that's the case, we may be able to provide them with a pregnant brine that has lithium in it. And so there's a real pathway in that direction as well. Again, these are not advanced discussions. These are informal conversations over a cup of coffee. And then there's Abermill next door. Abermill has the brine pans, evaporation pans. They've been producing for 60 years. They started at 1,000 ppm lithium content in their brines, and they're down to 60 to 100 ppm lithium. Their production has been decreasing year after year after year. The only way they can increase is to pump more brine, and they've been permitted to do that, but they haven't followed through on starting to pump more brines yet. So they're treading water, essentially. They're not producing very much lithium carbonate. And they may be open to interacting with us or other claystone producers in the valley. So those are merger potential scenarios.
Okay, I appreciate it, Tucker. Next question is, why do you think American Lithium is trading at such high multiples? Maybe, Tucker, I want to give some color on this before I let you answer that. So I've shown my screen here, and what I want you to focus on is the rows in orange. This table shows a list of number of advanced stage lithium juniors, and the orange line shows the multiple, valuation multiple, enterprise value to resource, enterprise value to ton. And you can see on the right here, Cypress Development, American Lithium, Noram. Noram was trading at $5 a ton when we did this report last month. Cypress was at $7 a ton. American Lithium was trading at $28 a ton. And then maybe, Tucker, do you want to respond to that, please?
You got to hand it to them. They have a very, very good marketing campaign. They're also listed on American exchanges. We're not there yet. We're going to get listed on an American exchange in the next 2 to 3 months. I think that will have a significant impact on our share price. There'll be a lot more people interested in the project who are living in the United States. Those are the two main reasons: incredible marketing, and then they're listed in the United States.
Geologically, I mean, we think it's almost identical. Obviously, the resource is larger than Noram, but in terms of geologically or kind of project-wise, are there any key differences?
Not really. They've been better funded from the start, which helps a lot. So I produced a table that makes a comparison on an equivalent lithium carbonate in situ basis, and even then they are significantly higher in terms of their share price with just resources. They don't have any economic studies yet. They're good. They have good marketers. Their deposit isn't any more or less simple than ours. It's a lithium claystone, horizontal, near surface or at surface, same mineralogy, and they've had a budget, and they've been able to advance very, very quickly because they've had the finances to do so.
Okay, very good. Talking about financing, that's the next question. Your cash position looks tight. Are you planning a financing soon?
Right. So we just had a small financing. We're using a significant portion of that for marketing to get our share price up, and we should have a financing sometime probably in September. Our share price right now is trading 19-20 cents. That's a lot more healthy than it used to be. We'd like to have it a little bit higher before we have a strike price for our financing. And we aim to raise $1 to $2 million. We also have, as I mentioned, warrants that are coming in already, and a significant number of warrants are basically at 14 cents. We're trading 19-20 cents. So we expect that some or a lot of those will come in the next couple of months. We'd
Okay.
like to have $1.5–2 million in the coffers to be able to run this program nicely.
Okay, thank you. And then just one last question there. Upcoming plans, press releases, catalysts for the next 6 months?
Yeah, so first of all, we'll have a drilling program starting in October. We have to plan the drill program. We'll have the drilling program itself, and we get results within 3 to 4 weeks in 2 batches for this first 10-hole drill program. And we aim to have 2 10-hole drill programs to effectively finish off the drilling of the deposit. So that'll provide press releases on a bi-weekly basis, pretty well all fall. At the same time, we'll initiate our preliminary economic assessment studies, which will be mine plan and chemical engineering studies related to the dissolution and concentration of lithium to form a marketable product. We aim to have some interesting variations on the lithium processing side that should generate some significant interest as well.
Okay, I don't see any more questions. Thank you so much, everyone, for taking time today. A recording of this presentation will be uploaded on our website shortly. If you wish to see our report on NORAM, please subscribe to our research at researchfrc.com. Thank you, Tucker, for taking the time. Thanks again, and wish you all the best and stay safe.